And and again, for a chartered accountant, the definition of small company is equally important, because there's going to be now less counting work. So now cash flow is not required, and there are many other changes also. So probably their income is going to be affected, because there is going to be less work, with respect to accounting work. And again, important for a lawyer also, because anything in a litigations also, they need to understand the definition of a company secretary. Friends, we are living in a world where things are changing very fast, and gone are the days, Mr. Bala will agree with me, where the Companies Act, used to, Companies Act, used to get changed, maybe it used to take a lot of years, to change, and sometimes, decade also for a change in the Companies Act. But, friends, now things are changing so frequently, and Section 285, subsection 285, Section 2, subsection 285 of Companies Act is a classic case where the definition of a small company got changed, 2 times in 2 years, almost, twice, since it got amended. See, this is how, like, things are changing. And why not? This was required because your rupees is depreciating. Even the value of rupees is also going down. So the government is very alert, and and of course, for ease of doing business in India, and to encourage all those small companies, to have a less, compliance, and that's what the government is taking a lot of initiative. So so this has changed, from earlier 50 lakhs capital. So the mandatory requirement to qualify to become a small company, 50 lakhs capital to turnovers of 2 crores, which last year it was changed to 2 crores to 20 crores. Now recently, 15 September 2022, it got changed to 4 crore capital to 40 crores, turnover. So this is very interesting, and there are a lot of other questions, been arisen, whether the CARO will be applicable this year, next year. So now, particularly those chartered accountant has many queries. Probably will deal during the discussions. So friends, let me introduce my today's the faculties. Astha Chaturvedi. She is an MCom, LLB, and a fellow member of our institute. She has almost 10 years of experience. She is a lawyer also, as I said, Master of Commerce. And presently, she is working as a compliance officer in a company secretary in a company called Reach Universe Network Limited. She has worked in across country, and now currently she's in, I believe, Raipur. And so she has done a lot of presentations on a small company also. So we have requested her to be a part of this discussion. And of course, Mr. Bala, Professor Bala doesn't require introductions, but a very rich experience with around 40 years of experience. He has worked with a company like Foseco and all for 30 years. And probably he has in this profession, 360 degree. So thank you, Mr. Bala. We are very privileged to be, we are very privileged you being a part of this discussion.
Thank you.
And we also have a young, energetic, our qualified company secretary, Ritika Solanki. She also comes with 3 years of post-qualification experience. So she's going to give a presentations, and of course, we have Astha and, Mr. Bala. So over to Mr. Bala. Yeah, then, probably Astha can, say some few words. Yeah, Mr. Bala.
Sure. When we talk about the small companies, immediately we will recall what we have been experiencing in past 2.5 years time in the COVID-19 situations. Everybody was at home. We are actually helpless. During this time, especially medical care related things have come to our home. Similarly, in various deliveries, food, household, anything and everything which came to COVID-19 time to our home. There are many people who actually started a small way a business, and they have actually flourished during this time. Even much before that, as Atul said it in 2013 Act, it said the small company has been actually introduced, and there has been also a SME sector, small medium enterprises sector is already there. And not only that, there is also a separate platform for the listing of SME sector, which is also there actually in the nationwide trading for raising capital, etc. And plus, there is separately a MSc. All those things are already in place. Really speaking, the bigger companies are depending upon the smaller companies for various subcontracted items. If we go to the larger company, we think everything manufactured the larger company, which is not so. Because larger companies, what they do, small things, they actually examine whether it is profitable to manufacture in-house or it is profitable to outsource it. Because their overhead, their fixed expenses, etc., are very high. So naturally, when they outsource it to a smaller company, they are able to do it with the labor and lesser expenditure, lesser variable cost, lesser fixed cost, etc., and other things and all, they depend on that. So naturally, the larger extent, our economy has been contributed by the small companies, and the government also recognizes the small companies because small companies is the one which give the opportunities for not only creation of the jobs to each and everybody, employment opportunities, and also is happening in a very small way, but at the same time, it helps to the many people. That is the way the small companies are there. And similarly, the regulators also realize small companies should not be burdened with a lot of compliances. So what they have done, they have given a lot of relaxation of the benefits for the smaller companies. And they also recognize the smaller companies can not be a private limited company, it cannot be a public limited company. And similarly, it cannot be a private limited company, which is a subsidiary of the public limited company also, which means the subsidiary company and the holding company, they are out of the purview of the small companies. So these things they are taken care of. And another thing is what happened in terms of even if some violation taken place, etc., and other thing and all, normally the regulator actually gives the benefit of the smaller company. There is a lesser penalties are levied because they should not be burdened with the extra penalties to them, which is applicable otherwise to other companies. That provision is also they have made it. As Atul has put it, there are a lot of relaxation in the sense in terms of board report, in terms of the coro reporting, in terms of the internal control reporting, in terms of the various disclosure, everything there has been a relaxation. Similarly, in case of the annual report also, they have actually given the exemption because normally what we file is the annual return in the MGT 7 form, which is usually certified in the profession which we file. There is a separate form that has been introduced, what we call MGT 7A, which is a lesser disclosure, etc., very simplified form, which has been actually given to the small sector. So having recognized that, government is definitely very much concerned about those smaller companies, promoting a smaller company. Nowadays, smaller companies are coming up in a large way and it is contributing to the economy. So it is better to understand the smaller companies, especially professional, as Atul has mentioned, company secretaries, chartered accountants, even for the cost accountant, we need to understand what is the smaller companies, what are the compliances, so that we can return the service much better to them. That is the thing. So with this background, I will go to Astha Chaturvedi to share her thought because she is our panelist today and she has made a lot of presentation on the smaller companies and she will actually deal with the realistic situation, etc. She will share a valuable experience to the participants. Over to Astha Chaturvedi, please.
Thank you, sir. Good morning, all of you. First of all, I would like to thank sir for giving me such a great opportunity to express my views on this topic. As we know that the Companies Act introduced the concept of small company to provide advantages for small business operating as a private limited company. You know, the small company have less annual revenue as compared to regular sized companies. And you know, in a country like India, small company have a significant role in generating profit. As Bala sir said, like it's very, so many small companies started their business during COVID situation because it's a very few compliances and it can start with a very less amount of capital and all that. You know, a small company are private limited company partnership or a sole proprietorship. Hello.
Yes, please go ahead.
Yeah, small company is like a private limited company partnership or a sole proprietorship having a few employees. And you know, this move of MCA is expected to lighten the compliance burden of 4 to 5 lakh companies in India. And this move is likely to get more companies under the category of a small company and benefit them in terms of compliance requirement. Get so many small company get benefited that there is a no need of certification, no need of like caro and cash flow statement, and there is a no need of IFC and less penalties, and there is a no need of only 2 board meeting. There's no need of 4 more board meeting as per private company, other public company. So there is a very few compliances. It will be good for a small company that they have very less penalties. And also, as due to this move, it would benefit for startups in India also. And due to this, so many startups started their business in India, and therefore we can state that the decision to amend the definition of small company is growth-oriented step for the government. As we go through the presentation, I will share my views over this. Thank you. Over to you, sir.
Okay, Ritika, you can start the presentation.
So first of all, I welcome you all, and I would like to thank Mr. Atul sir for giving me this opportunity to give presentation on small company. Today we will be discussing about what are the criteria that define small company, what are the advantages of small company, what are the disadvantages of small company, etc., etc. So getting started. First of all, we will discuss about background of small company. So the Companies Act 2013 introduced the concept of small companies to provide advantages for the business operating as a private limited companies. So generally, small companies are businesses which are mostly held by private limited companies. And small companies have less annual revenue compared to regular sized companies. In a developing country like India, small companies play a significant role in generating profit and boosting employment. Thus, they are the backbone of the economy. Small companies do not have any separate procedure to obtain registration under the Act. It is registered as private limited company. But the Act differentiates a private limited company as a small company based on its less amount of investment and turnover. So, the Ministry of Corporate Affairs, via its notification number GSR 700 Clause E, has yet again revised the definition of small company under Section 2, Clause 85 of the Companies Act 2013 by an amendment in the Company's Specification of Definitions Detailed Rules 2014 that came into force on 15th of September 2022. Now, it is to be noted here that amended provisions are applicable with the immediate effect, that is from 15th of September 2022 onwards. It is also pertinent to note that this is the second amendment to the definition of small companies in last 18 months. Earlier, the definition was amended in the Budget 21, which was effective from 1st of April 2021. So getting started, characteristic of a small companies are basically it has a very limited area of operation. It has a very few number of employees. Companies Act have specifically provided certain benefits to the small company that we will discuss later on in the slide. It holds a limited amount of investment that is based on its paid up share capital and the turnover criteria. It has a separate legal entity from its owner. The status of a small company may change from year to year basis based on the capital and turnover criteria. It has a low profitability and a revenue. So here are the few examples of a small company. Small companies may have businesses like organic farming, cloud kitchen, fashion accessories, exclusive plant and nurseries, housekeeping services for hotels, event management, pre-recruitment assessment, co-working spaces, healthcare and virtual medicines, site building and web design, pet services, etc. So here is the new definition of a small company. As we discussed, the concept is furnished in the Companies Act under Section 2, Clause 85. This is the recent amended definition as on 15th of September 2022. Here, the small company means a company other than the public company. So public companies are exclusively excluded in the definition of a small company. So only private company can become a small company. So which has paid up share capital of not more than 4 crore rupees or such higher amount as may be prescribed, which shall not be more than 10 crore rupees, and turnover of which as per its last P&L account does not exceed 40 crore rupees or such higher amount as may be prescribed, which shall not be more than 100 crore rupees.
This new definition is very important because you all might have noticed. She's also going to discuss this very much because she categorically underlined the word "and." That too also in the capital. The new definition is occupies very importance on that, because we all know our company secretary, when we started our curriculum in studying the CS codes, we learned actually interpretation of the act. The word or and, or stroke and, these are all the things which occupy very important things while interpreting the acts. Earlier, the definition which was for the small company, there were two conditions, and out of that, either this or that. One of the condition, if it is fulfilled, then you are actually a small company. But in the new definition said, no, both the condition. That means this and as well as other one also. That is very important here. So earlier, that is prior to 15 September 2022, any company, small company, fulfilling one of the condition was a small company, but effective from 15/9, the question is changed. Actually, the small company status is gone. And again, the amendment has come somewhere in the middle of the year, 15/9, because in our accounting year starts on 1st of May, 1st of April, normally for every company who's following financial year. Of course, there are certain companies which are following the calendar year which starts on 1st of January. But whatever year it starts, but up to 14 September 2022, the companies which remain as a smaller company, taking the criteria, either one of the conditions, they might have lost that status of the smaller companies effective from 15th of September by virtue of this decision. So this is a very important thing. I think Ritika is going to actually explain this in the future slide. Go ahead.
Yes, sir.
So now it is, you need to have two conditions, then only you qualify to become a.
Correct. You know to fulfill both the conditions. Earlier, one of the conditions. Now it is both the conditions. That means condition in terms of the investment, condition in terms of the turnover, both have to be fulfilled. Earlier, if you fulfill one of them, you are fine. But now that is not the case. You have to fulfill both.
So this was the first part of the definition. And this is the second part of the definition, which says that provided nothing in this clause will apply to a holding company or a subsidiary company, a company registered under Section 8, or a company or a body corporate governed by any specialist.
Some background noise is coming. Can you switch off the mic, please? Yeah. Yes, go ahead.
Okay. So this second part of the definition remains same throughout the year, starting from the year 2014, as in the original definition, the amended definition, first amended definition as on 1st of April 2021, and the recently amended definition on 15th of September 2022. So this second part remains the same. So now here is the original definition of a small company as on 1st April 2014. Small company means a company other than the public company which has paid up share capital which does not exceed 50 lakh rupees or such higher amount as may be prescribed in the rules by MCA, which shall not be more than 5 crore rupees, or turnover of which as per its last P&L account does not exceed 2 crore rupees or such higher amount as may be prescribed in rules by MCA, which shall not be more than 20 crore rupees. So here, out of these two conditions, only one needs to be fulfilled. So let's take an example of ABC Private Limited. So it has paid up share capital of 40 lakh equity share, face value at the rate of rupee 1 each, which is equal to 40 lakhs. And it has sales turnover of around 4,000 crore rupees. Now here is a very huge difference between the paid up share capital and turnover. That is because the shares were issued at a premium of rupees 1,000 per share on 40 lakhs, which is equal to 400 crore rupees. So, but the paid up share capital remains 40 lakhs, which is within the limit of rupees 50 lakhs. So this example is based on the original definition, that is 50 maximum the paid up share capital which does not exceed rupees 50 lakhs and turnover which does not exceed rupees 2 crore. So here the paid up share capital is within the limit of 50 lakhs rupees and turnover is way more than rupees 2 crore. So here whether ABC Private Limited can be regarded as a small company or not. So answer is yes. It is a small company and it can take all the benefits of a small company because only one of the two criteria was required to be fulfilled. So here, many companies were used to take undue advantage of this, and because only paid up share capital was required to be seen, and this premium amount, which is there in the balance sheet, but that is credited as a securities premium account, which is not a part of the paid up share capital. But here the paid up share capital is just 40 lakh. So based on only criteria of paid up share capital, the companies used to be termed as small company. So the question arises, is this correct? No, because security premium of 1,000 rupees on per share on 40 lakhs, which is 400 crore, was completely ignored, which is credited in securities premium account or balance sheet as only paid up share capital and turnover is required to be checked. To curb this loophole, the MCA has amended the definition and it has deleted or and replaced it with and between the two criteria while identifying the status of the company. So basically only paid up share capital and turnover, out of these two, only one criteria was required to be fulfilled. Now company will have to fulfill both the criteria of paid up share capital as well as turnover in the recently amended definition. So after the amended definition, in the definition of small company, whether ABC Private Limited is a small company? No, because only paid up share capital is within the specified limit of 50 lakh and turnover exceed 2 crore. Since both the criteria are not getting fulfilled, hence it is not a small company. So there is a difference between the old definition and the new definition. Earlier, it was a small company because one out of the two criteria was fulfilled. Whereas in the amended definition as on 1st April 2021, only one criteria is fulfilling, that is, only one criteria is fulfilled, so it is not a small company. So a simple comparison of the new and the old definition. So here are the original definition, amended definition, and the recently amended definition. So according to the original definition, that is till 31st March 21, paid up share capital, the maximum paid up share capital can be of rupees 50 lakhs, or the turnover in the immediately preceding financial year can be maximum for 2 crore rupees. On 1st of April 21 till 14 September 2022, the maximum paid up share capital is increased to 2 crore rupees, and the maximum turnover for qualifying as a small company is increased to rupees 20 crores. In the recently amended definition, the maximum paid up share capital is increased to 4 crore rupees, and the maximum turnover for qualifying as a company is increased to 40 crore rupees. So now both these conditions are required to be fulfilled. So few definitions which are related to small companies are paid up share capital or share capital paid up. Because based on these two definition, the entire small company definition is based. So means paid up share capital is such aggregate amount of money credited as paid up as is equivalent to the amount received as paid up in respect of shares issued, and also includes any amount credited as paid up in respect of shares of the company, but does not include any other amount received in respect of such shares by whatever name called, such as securities premium is not included in the paid up share capital. Then the turnover means the gross amount of revenue recognized in the P&L account from the sale, supply, or distribution of goods or on account of services rendered, or both, by a company during financial year. So these two conditions for the paid up share capital criteria and for turnover criteria, it is to be seen for the immediately preceding financial year's audited balance sheet and P&L account. Few more important definition is one more important definition is paid up share capital for the purpose of specifically for the purpose of clause 85 of section 2 means the aggregate of paid up equity share capital and convertible preference share capital. So while looking at the paid up share capital definition for identifying a company as a small company, paid up share capital amounts to paid up equity share capital and convertible preference share capital for this particular clause. Now here is the amended definition as on 1st April 2020. So we have already looked at the recently amended definition. Then we have seen the original definition, and this is the amended definition as on 1st April 20. So here, small company means a company other than the public company which has paid up share capital of not more than 2 crore rupees or such higher amount as may be prescribed in rules by MCA, which shall not be more than 10 crore rupees, and turnover, which as per its last P&L account does not exceed 20 crore rupees or such higher amount as may be prescribed in the rules by MCA, which shall not be more than 10 crore rupees. Here, the most important part of the definition is it has included and in between the definition. Secondly, here the MCA has also revised its prescribed limit in rule by its power and amended the exceeding limit, that is up to 10 crore rupees, and the maximum higher amount is increased for turnover is 100 crore rupees. Although the practically the recently amended definition, as it says, paid up share capital should not exceed more than 4 crore rupees and turnover should not be more than 40 crore rupees. But these are the limits which are extended, and it may change accordingly if needed. But it has just increased the limit. So this was an actual change in the definition. These were the two most important changes in the definition. First, increasing the maximum limit, and second, including and in between the two criteria, and not or, like both these conditions are required to be fulfilled and not one of the criteria is required to be fulfilled to consider as a small company. So here are a few examples. So we can recognize the status of XYZ Private Limited. So for financial year 21-22, we are required to check the financials of a previous financial year's audited financials, that is 2020-2021. So here, if we remember, for 21-22, the limit was for paid up share capital should not be more than 2 crore, and for turnover should not be more than 20 crore. So if the paid up share capital is 1.4 crore and turnover is 18 crore in the last audited balance sheet, that is for the year 2020-21.
31st March 21.
Sorry, sir.
21-22, if you take the last audited balance sheet, it was the year ended 31st March 21.
Yes, sir. But we have to consider the 21-22 because it has immediate effect.
Correct.
So, yeah, so on 1st April, it states the amount will change,
Yeah.
but it has the immediate effect. So we need to check the last year's financials based on the criteria which is given with the immediate effect.
Correct.
Yeah, so accordingly, both these figures are within the prescribed limit of 2 crore for paid up and 20 crore for turnover. So it will be considered as small company. For the next, for this same year, that is 21-22, if in the financials of we have to check the financials of last year, that is 2020-21, and if the paid up share capital is 1.4 crore and turnover is 35 crore. So here the status cannot be regarded as small company because the paid up share capital is less than 2 crore, but the turnover is more than 20 crore. So we have to fulfill both the criteria, and here the turnover is exceeding the limit prescribed, so it is not regarded as a small company. Again, for the same, yes, yes, ma'am.
As you know, you want to say that it should be both conditions should be fulfilled for a small company, like paid up share capital and turnover should be less than 4 crore and 40 crore, right?
Ma'am, actually, we are looking at the with the definition of on first
No,
April.
yes. Like paid up share capital should be less than 4 crore and turnover should be less than 40 crore. Then it's a small company.
No, that is right. What she is doing is she is doing 1 year back. That means prior to the second amendment, she is referring to the first amendment in the 21-22. Then she is coming to 22-23, the second amendment. Because first 3 columns are with reference to the first amendment, that is 1st of April 21, and the next 3, that is 22-23, is with effect to the recent amendment.
Yes,
so
sir.
that means earlier she is taking 20 crores and 2 crores, and subsequently she is coming back to 4 crores and 40 crores.
4 and 40 crores.
Yeah.
Right.
The first 3 are based on the earlier definition 2 and 20. The next 3 are based on the 4 and 40. First amendment and second amendment. Yeah.
Yes, sir. So if the
So that is why she was giving year wise. She is talking about 21-22, 21-22. Then she is talking 22-23, 22-23.
So here in the year for the third column, like for the year 21-22, we are again required to check the financials of 2020-21, and that time the requirement was a paid up share capital 2 crore and turnover 20 crore. So here also the paid up share capital is more, and even if the turnover is within the limit of 20 crore, still the company cannot be identified as small company. So now we are looking at the 2022 for the looking at the status of XYZ for the year 2020-23. Again, we are required to check the financials of 2021 and 22. And we are to check the paid up share capital limit up to 4 crore and turnover limit up to 40 crore. So if in the financials, audited financials, if the paid up share capital is 3.4 crore and turnover is 38 crore, so yes, it's a small company because both the criteria are getting fulfilled. For the same year, if the paid up share capital is 3.4 crore and turnover is 45 crore, so it will not be regarded as small company because the turnover is exceeding the limit of 40 crore. For the same year, if the paid up share capital is 4.5 crore and turnover is 35 crore, as per the last audited financials of 21-22, then also the status cannot be regarded as small company because paid up share capital is more than the prescribed limit of 4 crore, even if the turnover is within the limit of 40 crores. So that all is included in the first part of the definition. Now we are talking about the second part of the definition. Here, the definition states that provided that nothing in this clause shall apply to a holding company or a subsidiary company. So even if the individual as well as consolidated paid up share capital and turnover is within the limit, then also the status of a small company cannot be provided to holding or a subsidiary company, as it is specifically excluded from the definition. So now the question arises as to why the holding company or subsidiary companies are excluded from the definition of a small company. So according to my view, it is just because it is quite difficult to identify the status of an individual company in a group of company, also while consolidating the financial data, and there are chances of manipulation. So I would like to have any panelists view on this.
Right. So what is the question, why is the holding subsidiary?
Yes.
Companies are excluded from the definition. Is it quite difficult to identify the status of the individual company in a group of companies?
Yeah.
And also, while considering the financial data, there are chances of manipulation. So Ritika, can you just explain this? What is that you wanted to ask?
Sir, because other two conditions like the company registered under Section 8, for example, NGOs are specifically excluded because it has already issued exemptions and relaxation under the specific act. So they are excluded. That is second condition. The third condition talks about company or a body corporate governed by any special act. For example, telecom company that are those are regulated by TRI regulation, and
Right.
insurance companies are regulated by IDA regulation. So obviously they are not being given the status of small company because
Right.
they are not going to get both the exemptions and relaxations from both these regulations.
Right. So all these, special category companies are being excluded from the definition of the small company.
Yes,
So
sir.
whether it is an NBFC or a TRI or a anything, with respect to, so those in an insurance company, even if it is a small company, they are out of it, I mean, yeah.
Yes.
So, right, now that's what so what is the questions, you say that, yeah, Mr. Bala, you wanted to say something? Or Astha?
To ask like why holdings and subsidiary company are excluded from definition of a small company, right?
Yeah.
Here it is, what will happen in a larger company, you might have noticed, they create n number of companies. They get the funds from overseas. They create, subsidiary company. Then they create a downstream subsidiary company. And then money actually gets flowed from one company to the other company to the third company for the different purposes. They may call it some investment company. They will call it some holding company. They may call it for some sort of, particular service rendering company, etc. But ultimately, everything is associated only in the main company. Only the color is given separately to differentiate, to take advantage of various things within the loopholes of the companies. So the whole purpose is, if that is the case, it's very difficult to understand. Really, it is a smaller company or the bigger company is putting a color of the smaller company. That is the whole idea. Because the law can be, with a different way, you can actually, what you call, window dressing or modifying and taking the undue advantages for using some of the loopholes which they don't want to provide, especially the smaller companies. That is the purpose.
Okay, sir. Thank you so much. So small company does not have any.
There is one question has actually come. There's a gentleman is asking a question. There may be a holding company and also the subsidiary company, both fulfilling the criteria of the small company, but still they cannot be classified as the small companies.
Yeah. Okay. No. So it has been specifically been excluded. So if you are a subsidiary of any holding company, or if you are a holding company of any subsidiary company, you are out of this definition.
Correct. Definitely, that is right. Absolutely, you are right. Because ultimately, what a holding company, subsidiary company is one and the same. Only thing is you are fabricated. That is the thing. Yeah. So ultimately, if you merge to them, it loses the identity. So it cannot be.
So and there are no criteria for a borrowing also, right? I mean, I think there is some questions.
It is only based on investment and as also turnover. That's all. What is the paid up capital
and what
is the turnover? That's all.
Right.
Okay,
right.
So even if I am a small company and I'm withdrawing 100 crores from the bank, so I still continue to become a private limited.
Yeah, that is right. So long as your paid up capital remains within the limit, so long as your turnover remains. Because you see the whole idea when you say I borrow the money, do the business, the turnover is anyway likely to exceed.
Right.
So
Okay.
in which case automatically you lose the smaller company status. Purpose is only that, no? Because when you say the borrowing, when you get the more funds, you will get the more business. Then you will hit in the second condition. And that is why, like, if she was discussing, when you talk about the share capital, she actually specifically said it is only the capital and the equity capital and the preference capital.
Preference, yeah.
Debenture is kept out of it.
Achha, debenture is kept out. Yes.
Convertible debenture is not there. But once the debenture gets converted, becomes a paid up capital, then it will get hit.
Okay.
Yeah.
Right.
Yeah, continue, Ritika.
Yeah, go on.
A small company is not mandated to file any form to convert itself into a non-small company. Until the company is under the eligible bracket of small company definition, it will continue to be a small company. When a company crosses the limit given in the definition, the company will spontaneously be converted to non-small company. So there is no as such form for the converting company into a small company, something like that.
Like a company will automatically convert it into a private company if it's not converted into a public company. It's become a private company when it exceed the criteria of 4 crore and 40 crore.
Yes, ma'am. Only private companies can become a small company.
Small
Public
company.
companies are excluded.
Not, yeah, excluded, right, right.
So which means the law recognizes a private company which can be as a smaller company so long as it remains within the criteria what is actually given in the law. Once the criteria is actually not fulfilled, then automatically it is no more a smaller companies and it has to revert back to the full compliance, etc. and other thing at all, which are applicable to the normal private company. That is it.
So like small companies should check every year that it is in the limit or it is out of the limit.
Yeah, that is very important because every
Very
year
important.
they have to go
Right.
with the reference to the last balance sheet. They have to
Yeah,
check
yeah.
every year. The status might change accordingly. They have to take a suboto voluntary action. There is no
Right,
question
right.
of somebody is finding out, somebody is telling you, taking a permission, filing a form. No,
No,
formalities
no,
are involved.
no need of any formalities.
Correct.
So Mr.
Right.
Bala, suppose during the year,
Yeah.
if I have increased my, this capital
Yeah.
from 4 crore to say, 10 crores, so I still
Yeah.
continue to become the small company till 31st, or I mean, how does it work? Because so once I'm changing my capital,
Yeah.
I'm increasing my capital.
The
So from
word
that date onwards.
No, the word used is to ascertain your smaller company status, the last audited balance sheet.
Last audited.
So the moment I take last audited balance sheet, yes, okay. In between, I might have crossed, I do not know. But my last audited balance sheet is available only at the end of the year. Once the end of the year is there, the very next year, I am no longer a smaller company.
Okay.
It might happen somewhere in December, January, February, March, etc.
Okay.
But that doesn't matter. It is only the next year. But one condition here, that is what is the latest amendment which actually has come with the immediate effect, that is 15th of September, both the conditions. There you have to take both the condition with the reference to the last year audited balance sheet. Because here again the audited balance sheet.
Audited balance sheet, right.
So basically the recently amended definition talks about 4 crore rupees for paid up share capital and 40 crore rupees for turnover. So we have to check these means this is with the immediate effect, but these conditions needs to be checked in the previous year's audited
Correct,
financials.
absolutely
And
right.
based on that, you can be considered as small company or a big company.
Correct.
So here are the characteristics of a small company. Low revenue and profitability.
Mr. Bala, Abhishek has some more questions,
Yeah,
I don't know. Yeah, if you can just take up this.
Yeah. To avoid check on the definition every year, can a company voluntarily classify itself as a large company for better corporate governance and file MCT7 instead of MCT7A? See, the question is like that. You want to take advantage of the smaller company, you remain as a smaller company. That is the thing. If you want to do, no, I don't want to call it myself a smaller company, I will continue to put the condition. Choice is actually yours. Because the whole idea is telling you the smaller company is, okay, there are advantages you can take so long as you remain within this limit. If you don't want to take the trouble of checking the limit, if you don't want to do the things, etc., okay, let me remain whatever it is all right. Because whether you want to take the advantage, whether you don't want to take advantage, is up to you. Because the regulator is not going to dictate how the way you should do the business. They are not going to interfere. But they are going to say the way in which, if you do this business, these are the advantages available to you. If you do the business this way, these are the advantages available. You decide whether you want to take it, whether you don't want to take it. Because I don't know, really speaking, why to call it ourselves to avoid, etc., etc. It is only a question of checking every year at the end of the year when the audited balance sheet is available. And a lot of advantage. Why unnecessarily get into full-fledged board report, full-fledged CARO report, full-fledged internal control report, and again, having a 4 board meeting, annual general meeting, etc., and the other thing and that. Because law tells you, so long as you are a smaller company, you have only 2 meetings in a year. That is sufficient. There are no more.
You have very less compliances in comparison to private companies.
Correct.
Right.
So if you want to take advantages, it's up to you. If you still say, no, I don't want to take advantage, I will do everything. Okay, you do it.
Yeah. Okay, we can move next.
So the first characteristic of a small company is a low revenue and profitability is also low.
Sorry, Mr. Bala. Sorry. So what I'm trying to, probably the Abhishek, has something in his mind.
Yeah.
Now, see, I fulfill both the criteria.
Yeah.
My capital is 4 crore.
Yeah.
My turnover is, 40 crores.
Yeah.
Okay.
Mm.
Yeah.
And then for all purpose, I'm a small company,
Okay.
but I have a huge assets.
Yeah.
So my assets can be, 100 crores or 500 crores.
Okay.
Mm.
But still be classified as a small company, right?
Yeah, that is
Right.
right. So long as
That is right.
turnover criteria and paid up criteria remains, you are a smaller company. The moment, see, when you say you have a larger asset, your your turnover is only within the limit of 40 crores, which means
Yeah.
what it shows you are not doing your business efficiently. You are not utilizing resources to the fullest extent. You are not developing your business. In the longer run, who's the sufferer? You are the sufferer.
Yeah. So maybe, I wanted to keep myself, small company.
Yeah.
So the idea is like, every year, suppose, I earn, say, 20 crores in 5 years, I have a net worth, not net worth, but, assets of more than 100 crores.
That is right. But the problem is all will become a non-performing assets.
Sorry?
It all will be non-performing asset because you are not utilizing the resources what is available to you.
Yeah. So this is lying in my mind.
Suppose you say, I have a huge machinery, which you are not using it at all. That is what is happening. It is becoming a non-performing asset. No?
Right.
Okay.
Yeah. See, that is what they're saying. The regulator is saying, look here, I am not going to interfere the way in which you do the business. Doing a business is your job, and looking after the compliance is my job. That's all. Let me not interfere in your area. But at the same time, if you are within this, if you are a smaller company, really, I will extend certain facilities and benefits to you. You take advantage. If you are a bigger company, yeah, sorry, these benefits are not available to you. You have to fulfill all the things because in the interest of the better corporate governance, transparency, and disclosure, this is what you do. Because I don't want to burden the real smaller companies. That is it. But if you still say, no, I remain the smaller company, but I don't want to take the advantages, it is up to you. Who am I to stop you?
Yeah. So Rekha, no, we have another questions.
Yeah.
This means the amended definition will be practically checked, or maybe, effectively it will be useful, because, this amendment has come from the 15th September 2022. So now, so the conditions, will be applied for this current financial year, that is 22-23 years. So Rekha, answering to your questions, right now, Astha, you understood the questions?
Yeah.
Effectively, so year end, you need to check those.
Check the, like on 31st August 2023, you have to check audited balance sheet of that
Correct.
year.
So, the question, I believe, what I understood, Rekha, is that this is for a current year. So on 31st March 2023, the auditors will check, look, is your capital is 4 crore, or are you going beyond, 40 crores?
Turnover is 4 crore and 40 crore. Paid up capital and turnover. If it is within the limit, then it's a small company. Exceed, then it will be a private company. We have to check 31st March 2023 balance sheet, audited balance sheet.
Okay. Yeah, great. Yeah, so Ritika, we can move on.
Sir, I have a question. Like, we have to check the recent amended definitions talk about 4 crore and 40 crore limits for the last year. Like, we have to check the last year ka audited finance.
Yes. The point I am coming to this. This is what we said actually. The amendment which came in September 22, which talks, this takes with the immediate effect, that is 15 September 22. So on 14 September 22, if you fulfilled one of the conditions as per the last year balance sheet, you are a smaller company.
Yes.
But on 15th of September, you have to check with a reference to the last year balance sheet audited only both the conditions. So if that is the case, in the current year itself, you lose the status of the smaller company. You cannot continue to be a smaller company till the year end. Because what you are saying, the amendment has come on 15th. So you will check it in the next year. No. Amendment says
Oh,
it
okay.
is
Okay.
immediate effect.
Yes.
Immediate
Okay.
effect means today you check whether you are a smaller company or not a smaller company with reference to the balance sheet already available to you for the last year.
Okay.
You
But
fulfilled one of the condition, you remain as a smaller company, fine. You please check whether you fulfill both the condition, still remain the smaller company, continue a smaller company. If you are not fulfilling both the condition, you are not a smaller company, please switch over to the private company full-fledged.
So, sir, see, most of the audits are over now. So practically, if somebody has to ask the practical question at this point of time, see, by amending on 15th September 22, I think most of those companies audited things has been done now.
Not only that, the audit is already over. It is only a question of AGM. 1st October, in any case, everybody will have the audited balance sheet. So you are going to check that. So with that idea only, they have brought in the current year itself. You have to check whether it's the smaller company or the bigger company.
Okay.
That is the purpose.
So
that is why this amendment has come in the month of September.
Okay.
So basically, the limits are provided now, but it has to be checked in the last audited balance sheet.
Correct. You're absolutely right.
Okay.
So the last audited, for the current year will be 21-22.
Yes,
Right,
sir.
sir?
Yeah,
Yes.
31st March 22. 31st
Okay.
March 22, you have to find out, you have to
31st.
decide 22-23 whether you are a smaller company or a bigger company.
For the year 22-23, we have to check 21-22, and with the limits of recent, like 4 crore and 40 crore, we have to check
40
in the last audited balance sheet 21-22. And if
Correct.
it is satisfying over there, then it's a small company for 22-23.
Correct.
Yeah, Rekha, so I stand connected because probably my answer was that first year will be 22nd, 22-23.
No.
Yeah.
Current year itself,
It's a
it will
20.
give effect. Yeah.
31st March 22.
So which means
Right.
the sum of the companies will be no longer a smaller company the moment both the criteria is applied.
Mostly a small company operates in a limited area rather than having several branches. A small company will not be spread across several nations or even beyond the boundaries of its own state of operation. So for a small company, the sales are restricted to just one area. So now we are looking at the benefits of a small companies under the Companies Act 2013. First is board meeting under section 173 of the Companies Act. So a small company shall be deemed to have complied with the provision of section 173 if at least one meeting of the board of directors has been conducted in each half of the calendar year and a gap between the two meetings is not less than 90 days. So generally the private limited companies are required to have 120 days gap. But here only,
90.
Only two meetings are required to be done.
Like a minimum 2 meetings, board meeting of a director, gap should be 90 days for a small company.
Yes.
Yeah.
So that means every half year, first half you have one meeting, second half one year. Mandatorily that is sufficient. But if it is required, you may have board meeting. That is different matter.
Yeah.
Then cash flow statement under section 92. A small company has many benefits with regard to preparation of financial statements and annual reports. Under the provision of section 2, clause 40, the financial statement include cash flow statement, but for small company, it has been specifically excluded. So the small companies are not required to prepare the cash flow statement. Then certifications by professional. So following are the forms for which the small company is not required to have pre-certification by CA or a CAS or a cost accountant in whole-time practice as per Rule 8 of subsection 12 of the companies, the registration offices and fees rules 2014. So the forms includes INC 21, 22, 28, PAS 3, SH 7, CHG 1, 4, 9, MGT 14, DIR 6, 12, MR 1, MR 2, MSc 1, MSc 3, 4, GNL 3, ADT 1, AOC 4, NDH 1, 2, 3, GNL 1, TPT 3, and MGT 10. Fees to be paid to the registrar on incorporation. So in order to lessen the burden on small company, the fees that has to be paid during the incorporation of a small company is reduced nearly half when compared to other large entities.
Large quantities.
So then, there is a lot of loss for the professionals, sir. So
Yeah, definitely.
That is true. But at the same time, you will not also see the volume will increase because 7A is anyway going to be there. AOC filing is going to be there. But in terms of the volume, if you take more, see again, it's a lesser work and more the volume if you want to do the business.
yeah, that's what. But by doing this, there are more than 2 lakhs company is out of the the compliance. So by adding these definitions on 15 September 2022, I was told that there are more than 2 lakhs company will be out of this. So they'll be classified as a small company, and all those compliance will be reduced. Right?
Yeah, that is right. There is a gentleman is actually sharing his experience. He says here, Abhishek, recently I filed a DPD3 on a small company on V3 portal. It says it is mandatory, it requires certification. Yeah. Astha, would you
I think no, it's not mandatory if it's a small company for DPT3.
Yeah, any particular option, etc., is to be exercised or something like that in that with filing? Because I'm not very sure about it since I have not done it.
Yeah.
Yeah. Or otherwise, it could be some technical error, automatic message would have been generated, I think so. Otherwise, it is not because law is very clear on this. He himself says it may be due to some technical error. Yeah.
Okay.
Yeah.
Okay, Charles. Yeah, Ritika, continue. Yeah.
Yes, sir. So basically, these are the compliances removed just to ensure the ease of doing business, I think. So the next slides again talks about the benefits of a small company. Disclosure in the annual report. So certain provisions regarding the disclosures of details of remuneration drawn by the directors are not required for small company. Only the aggregate amount of remuneration drawn by this director can be mentioned instead of providing all the details. So this is the welcome change. Then again in the annual report also, the annual return filing of a small company can be signed either by a company secretary or a company's director. Instead, a self-certification of a director would be sufficient. The annual return filing of a private limited company other than a small company must be signed both by a director and a CS. But only a director can sign the annual return.
Here the form is actually different because MGT7, which is requiring a certification, you have to choose MGT7A form, which is not requiring a certification. It can be signed by the company officials only, either the company secretary if you have one, or otherwise the director of the company.
There is no need of certification for from professionals in case of a small company.
Exemptions in the auditor's report under section 143, subsection 3. So according to the section 143, subsection 1, subsection 3, clause 1 of the Companies Act 2013, the auditors do not have to report on adequacy of internal control and their operational effectiveness in the auditor's report. So this is again different than the normal private limited company.
Right.
Then in case of amalgamation under section 233, special provisions have been made in the Act for merger of 2 or more small companies, or between a holding company and its wholly owned subsidiary company, or between 2 or more startups, or 1 or more startups with 1 or more small company. This provides for liberal methodology for amalgamation without going to the tribunal if the registrar and the official liquidator has no objection or suggestions to the scheme. So again, the reduced penalties under section 446B. If a small company fails to comply with the provisions of the Companies Act 2013, such company and officer in default of such company shall be liable to penalty, which shall not be more than 1/2 of the penalty specified in sections. So here penalty is also reduced for the small companies. Then a rotation of auditors under section 139, subsection 2 of the Companies Act states that mandatory rotation every 5 years of individual auditor and every 10 years of firms or of auditors. In case of certain prescribed class of companies, this rotation requirement is not applicable in case of small company and one-person companies.
That means if you appoint an auditor, then you don't take for rotation of auditor. You can appoint for 5 year or up to 10 year for the next 10 year, right?
Correct.
There is no need
Yes.
of rotation of the auditor.
Yeah.
Not required.
So this is a great move where, you do not have to have a chak of changing the auditors, and this is a good move.
Right.
And the internal control is not to be certified by the chartered accountant. That is also good.
Chartered accountants, right?
So I'm very happy. We have a very senior people who has joined a part of the team. Is that Abbas Lakadawala sir is also there, and Shweta Parwani, my friend, who has also joined this presentation. Yeah, continue.
So advantage of preparing an abridged director's report. The Companies Act exempts small companies from filing director's report. All that a small company has to file is an abridged director's report. The abridged version of director's report will be much less vast than the director's report itself. So a small company can omit several clauses that forms part of the director's report.
But they have actually simplified the compliances in terms of not only a reduction in the compliances, even the simplification of the compliances, and what is the minimum requirement which is required. That is what they actually put to, recognize in order of doing the business and to give the more opportunity for them to concentrate on the business and do it in the ease of doing business. Yeah.
This is right, because preparing a director's report is a marathon exercise.
Correct.
Yeah. I think as per Rule 8A of Section 134 of Companies Act, there is no need of disclosure of, as mentioned in Section 134(3) in case of a small company.
Okay. Great. Yeah.
Move forward.
Exemption to CARO 2020 reporting. So if a company is covered under the definition of a small company, it will remain exempted from the applicability of the order, even if it falls under any of the criteria specified for private limited company. Here, the important consideration in relation to the provision of a CARO reporting and a small company definition is the limit of ₹4 crore as per Section 2, Clause 85 small companies definition is for paid up capital, whereas the limit of 1 crore in case of CARO reporting is the combined total paid up capital and reserves and surplus. The turnover limit of 40 crore in case of small company definition is to be checked for the immediately preceding financial year, whereas the limit of 10 crore is to be checked during the financial year. But according to the exemption given under CARO 2020 reporting, if a company is a small company, it is specifically excluded from the CARO reporting.
Here the question is, what happens is one small question comes over here. When you go through the CARO reporting criteria, it talks about combined total of the paid up capital and reserve and surpluses. When you talk about the smaller companies investment criteria, it is only the paid up capital. It doesn't consider what you call the share premium account. So here, when you talk about the capital and reserve and surpluses, share premium account is nothing but a surplus. That is the thing. So in which case, here there is a smaller companies may be there, but if they exceed this particular limit under the CARO will become applicable in my opinion. Any chartered account is there in the group, they can share their understanding among the delegates.
No, I think we do not have any chartered account. Anybody from a group who is a chartered accountant? Oh, I don't think so, sir. Yeah.
Because here the thing is combined total of paid up capital and capital and reserves. Because share premium account is nothing but a reserve only of the company. Because it can be utilized for many purposes, because it is not separately earmarked for specific purpose. So that might get hit actually in some cases of the smaller companies for the CARO report.
Okay.
Yeah, although law says smaller companies out of the purview of the CARO reporting, law says like that. But the thing is, there is a small conflicting things are there between the Caro reporting and as well as the smaller companies. So which will prevail, we have to see. But safer side, if it is get hit, we have to get the Caro reporting. That is what the auditors will take. Yeah.
So the last paragraph, says the turnover limit is of 40 crores in case of a small company is to be.
Yeah, that is okay, but it is only the question of paid up capital.
What's a paid up?
Yeah, because their paid up capital is only excluding the share premium account. But here, the paid up capital plus reserve and surplus. That is the question.
Yes.
So this is the area. So they probably want us to check up actually.
Yeah.
Because she took the example now that initial 40 lakhs capital and 400 crores share premium account. In such cases, the Caro will get hit.
Definitely.
Yeah, that is the question.
Yeah, Ritika.
Yes, sir.
Move forward.
So again, the advantage of preparing and filing an average annual return. So small companies required to file annual return from the financial year 2020-21 onwards in form MGT 7A. One of the key highlights of form MGT 7A is that the details of director and KMP, that is the composition of board of director, details of directors and KMP are not required in the abridged form. Form MGT 7A is the abridged version of form MGT 7, which is filed by medium and large companies. A small company is also not required to prepare a report on the annual general meeting.
Okay.
So here are the challenges and problems faced by small company. So finance is that is inadequacy of funds is the biggest challenge for a small company. Raw material, especially the quality of raw material is also a problem. Then lack of managerial skill, no skilled manpower, working capital requirement, then the obsolete technology or not having the recent technology in hand, then marketing and advertising is also a challenge for a small company.
What happens is in the smaller companies, when you go to the bank and other things, they hesitate to lend their finance. That is a problem. Although people say borrowing, etc., question was there theoretically, if you have the more borrowing. But the thing is, when you are in a very smaller company, when your income is very slow, your this turnover is there like that, you are depending upon the things. Naturally, getting the finance is definitely is going to be a problem. Similarly, when it comes to managerial skill, the skilled person would like to choose join in any bigger company. You ask any of the company secretaries who's actually which company you want to talk, you will talk about the bigger companies. Oh, I would like to join with the Infosys. I would like to join with Mahindra and Mahindra. I would like to join with this company. Like that only people aim. Okay, aiming very high is very good. But thing is, we have to actually achieve it lesser because somewhere we have to start a beginning. So here again, the question is, there are a lot of hesitations, people who want to join with the smaller companies. That is the question. Because of course, smaller companies are flourishing like anything. Because we have been seeing very recently, there are a lot of smaller companies which has actually come up. In fact, in one of the sessions, we were actually discussing about women entrepreneurs, etc. and other thing. And out of that, you took an example of Nika. How the people have joined in a smaller group, how they actually grown up the company, how they actually got benefited, etc., which was actually explained in one of the presentation. That is possible. But the thing is, by and large, yes, these are all some of the challenges, etc. Of course, Ritika is actually putting up the slide, how to overcome some of the challenges, etc. Of course, with the digitalization, which is actually now shaping up, the future is going to be with the digitalization. Taking the advantage of the digitalization online platform, some of the challenges can be mitigated, reduced, to overcome, especially in case of the marketing, in case of advertising, in storing, etc. Another thing and all, I think she is going to discuss. Correct, Ritika?
Yes.
Yeah. Sir, I have another, problems, I mean, the challenges. So as in Mehta Mehta, we have many small companies.
Yeah.
And, I normally interact with those, the promoters, The challenges they have is that see, look, we have a less margin. So when we get a payment from the clients, you have a 10% TD has been deducted. At the same time, once you raise any bill, you have to add this GST.
Yeah.
Now, whether the client pays you or not, you have to pay that GST.
Correct.
And sir, the recent amendment, what is the recent development with one of my clients, he says, Mr. Mehta, I've started getting a call from GST department saying that, आप जल्दी से pay करो, आपका due हो गया है. Where the law gives you a time, so, even if you pay late, you pay with some, a nominal late filing fees. But still, these people, they are threatening them, can look, if you do not pay, in time, then, we'll just freeze your bank account. Now, this is the big challenge, So you have a less, 10% you get from your client. At the same time, GST, whether you recover or not, and you appreciate, that all this small company, they work on a very thin margin.
Correct,
So
you're right.
10%.
Absolutely, you're right. I agree with you. There is really a problem because the thing is, what happens? There are too many things which are happening. One thing is that, especially when the year is approaching year end, the people have been given a target collection, revenue collections. So they are working towards, they are finding out the ways and means and other thing and all. What you said is sort of a call which is actually happening around. That is true. Yeah.
Yeah, Ritika, you can.
Yeah, there is somebody's asking, are not these provisions essentially promote the ease of doing the business by reducing the compliance burden for small companies? Is that really being achieved? See, question is all said and done. As she has put in the first few slides, there are a lot of companies which have been actually doing a business really in terms of medical hair and organic farming and various other things. All our companies are actually flourishing. It is actually coming up, but all said and done, yes, there are problems are there, but the law is taking care of it slowly because that is why the law has been actually amended first time, second time, they given the benefit, they are reducing the thing. We can expect more to come because as Atul said, I've been seeing the company site which was there from 1956. My elders used to say they were working with the company site 1913. Okay. But the thing is, between 1913, the amendment has taken place such a long time, we amended the Companies Act 1956. In 1956, Companies Amendment, which got amended only in the year 2013. But you see, after the 2013, how many times the Companies Act has been actually amended? How many provisions have been added? How many relaxation has been given? Because today, the things are moving very fast. Government is also taking action in the interest. Government is more concerned about ease of doing business, ease of actually giving certain benefits to the people who are actually in a MSME sector, SME sector, etc., and other things and all. So this is going to happen in future. But today, yes, there are certain problems are there, but whatever it is, we have to live with the problem, but we have to find out the ways and means of solution. Because we cannot only depend upon the regulators, we have to also do our own part. So that is where I think Ritika is going to talk about digitalization, etc. And other things, we'll watch what she has got to say. She has got something to share with us. Yeah.
The status of a company, it changes. So as we discussed earlier, the status of a company changes every year depending upon its paid up capital and turnover limits. So when a company crosses the threshold limit provided in the new definition, either for paid up capital or a turnover, the benefits available during the financial year will be removed in the following year. So basically you have to check the prescribed limit in the previous financial years. Data of the audited previous financials. The small company will lose its status as a small company and be treated as a private limited company, not classified as a small company. So once the status of a small company is not there, it will be treated as a private limited company if the threshold limits are exceeded. So now the key takeaway about are only a private company can be classified as a small company, as public company are specifically excluded from the definition. If a company doesn't cross the mentioned limit, yet such a company is any other company, then such company cannot be regarded as a small company because that has also been excluded, exclusively excluded from the definition. A public company cannot be a small company. Section 8 companies are also excluded, and a company or a body corporate governed by any special act are also excluded from the definition of a small company. Now we are looking at the how to overcome the challenges faced by a small company. So in early stages, let the business be small or big, problems to come. But it all depends on how one overcomes and tackles different situations that appear no way. There are some suggested solutions that one can adopt using online tools to keep a record for inventory, sales receipt, or any other important reports. And this would help managers to keep close attention to all the happenings in the business. So small company will have to get digitalized and use the very recent online tools to keep everything on in the business in closely
small companies should use social media for advertising and all that, and should use online tools for recording all like inventories and sales receipt and all the documents like accounting, financial documents, right?
Yes.
Yeah.
Time management needs to be well planned before, especially for small companies, small businesses. The reporting manager or staff must closely look up timesheets of the employees and prepare some strategy for quick responses and work on time. So basically, these are the solution given to the problem faced by small company, particularly when the business is small. If possible, make one online store to mark digital visibility. Nowadays, being digital is one of the most important aspects, as everyone searches through online search engines before buying or visiting any shop. So it talks about artificial intelligence, which is the recently it is used by all the businesses. So small companies are also get into the business with online stores and use all the online media available.
Small companies should start their business on online website. Like there are so many companies, Amazon and all that.
Yes,
they are
yes.
working as a small company. So small companies should use social media for their advertisement for their like online business, right?
Yes, ma'am.
Yeah.
Any
Yeah.
business.
Marketing can be done better online. That is one thing, because nowadays everybody depends upon Google. Ghana goes there to finding out the story, etc. Another thing, everybody is finding out online. They make up their mind, they do it. So really speaking, if you host on the online, if you market your product, if you publicize your product on online, that will have a greater visibility. Number one. Number two, as Astha Chaturvedi said, you can get a license with the people who are actually doing the online marketing, like Amazon, Flipkart, Snapdeal, etc. Another thing and all. They can do that. The delivery can be a little faster and marketing can be better. These are all the things they can use. In fact, today, digitalization is taking a very big leap. So definitely the digitalization will help to a greater extent to those small companies. That is
Right.
Yeah.
So small businesses comes with a plenty of risk, and sometimes they are just more frequent than needed. So insurance play an effective role in managing the accidental damages caused to any part of the business. So insurance promises safety for employees, staff, businesses, investors, and for customers too. So good coverage is always a good friend for investor. Basically, these are the given solution to a small company. Like they should use online platform, they should have insurance, they should have time management. As all these are just to help ease of doing business.
One thing is that definitely government is going to come up more things to improve on the small scale business, because there is already a SME platform is there. There are already a MSC which are actually looked after and other thing and all. Even when you come to the payment, Atul Mehta was talking about payment. In fact, the MSC requirement is there. You know to see the payment is actually made these people within 45 days, beyond which if you make a payment, you know to make with the interest. And not only that, there's a disclosure requirement is there. Even auditors have to certify in their internal, in their audit report also. Those provisions are already there actually to safeguard the interest. I think we can expect more from the regulator in future. Yeah. Go ahead.
One more thing I want to include that about tax implication. In case of a small company, there is very less a tax implication regarding filing of return. Am I right, Bala sir?
Yeah, to some extent it is there. But anyway, the tax collections, as Atul Mehta puts it when he's come to the GST, etc., and all this thing,
Yeah,
they are not enjoying much benefit. That is there. Probably some sort of a representation could make the things work.
right.
Yeah. Yeah, go ahead.
So the conclusion, the government has always been committed to taking measures which create a more conducive business environment for law-abiding companies, including reduction of compliance burden on small companies. The idea of the government seems to increase the pool of the small company by 10 to 20%, and higher threshold will allow several startups to avail the lenient regimes. That is the reason the paid up share capital and turnover thresholds are increased from 2 crore rupees to 4 crore and from 20 crore rupees to 40 crores. So in recent times, the government has taken various measures, including decriminalization of various provisions under the company's law to further improve the ease of doing business in the country. So that's all from my side.
Oh, great. Thanks. So if any participant has any questions,
I think we have answered all the questions. There is no questions are actually pending from the participant. If still they have anything, they can put up their question, they can raise their hands, they can answer.
great.
Yeah.
So we can conclude, sir. With
Yeah,
your
sure.
permission. So I would like to thank Astha, Mr.
Yeah.
Bala also, and Ritika for this wonderful presentations. I think many things to learn, and as I said, the changes are happening very fast. So last 2 years, you have two changes in the definition of a small company. So I think as a compliance officer or as a chartered accountant, as a lawyer, we need to keep track how things are moving, and friends, if you can suggest some good topic also where we can take it up. And
there's already a suggestion has come actually.
Yeah, one
You
suggestion is
may
there.
consider the topic a new overseas investment framework.
Right.
Yeah.
Okay, investment framework. Okay,
Yeah.
so yeah. So thanks, and yeah, we'll take up those topics which has been suggested, and yeah, so we are going to be doing in a big way, and this PPT will be sent to all of who has registered themselves for this programs. And friends, all these presentations, webinars, we are putting in our YouTube. So in case if anybody has missed out our previous program, so there are more than 50 programs, the recorded webinars are available on our YouTube. So in case, if anybody has missed out.
There are some people, they are saying they are not received the PPT and the things,
Okay.
etc. And they are asking, how do we
Okay.
get it? So if we can give the mail ID, etc. to them, they can get in touch with you.
Yeah.
Yeah.
I think what we are doing, I believe, let me check, we are also putting in our website also, so they can download from the website.
Okay.
I'll make sure this at least starting from today we can just the same. And don't forget to subscribe our YouTube channel. So this will help you to get an alert, and of course the thumbs up and liking also. Yeah, thank you. Thanks everybody.
Thank
Thanks
you. Thank you,
Astha
sir.
for a short notice you accepted.
Thanks a lot, Rikita. You have
Thanks.
done a wonderful presentations.
Thank
You
you.
actually taken
Thanks,
us with a
Ritika.
very
Thanks,
capsule
sir.
form, and you actually elaborated very nicely the recent provisions, and you get the benefits, etc. in a very, very lucid way in understanding. Very good, great job you have done. And thanks to Astha Chaturvedi for your
Thank
active
you.
participation,
Yeah.
sharing your views. Thanks a lot.
Yeah, thank you, sir.
Thank you all.
Thank you, everyone.
Have a good weekend. See you next week, sometime new program.
Yeah, sure. So,
Okay, bye.
okay.
Okay,
Bye-bye.
thank you.
Have a nice day. Thank you.
Thank you all.